Hey guys, Mike here. So, oh boy, what a day in the market. And I don't know if you caught what, calling big money, hedge funds, all that stuff we're doing today, but it was very interesting to see. And you might have noticed, had a little economic data come out, which was the markets are acting really strange. Not like we haven't seen this before, but it's like, we get CPI data, hot, market rages. We get PPI today, comes in hot, market opens green, and then finally sells off. But you might have noticed the Qs held up very well till basically about the last 2 hours of the day, but they were holding up really well for a reason, and I'll show you what I'm talking about. And so we're in this moment where we get economic data, which I'll show you, and we're in this like repricing phase. Like, oh, wait a minute, we're not going to get the rate cut in June. You're probably going, what do you mean we're not going to get the rate cut in June? This is what this kind of data does. Let me show it to you. So here's PPI month over month, and you can see it came in twice as much as I thought. I thought it was going to come 0.3, it come in 0.6, but you see the last couple months, right, from December, January, February, how it's been going up month over month, and then the headline, of course, didn't hit either, so all came in hot. Then you had your jobless data, again, came in under what they're expecting for the claims here, and you can see on the chart that, this is something, the job market has just been super, super tough right now, even though you see unemployment rate at 3.9%. You can see this line isn't really going where the Fed wants it to go, so to speak. You got initial claims still going down, not up. We're really ever hitting the number they want us to hit, by the way. And then you're sitting there with continuous claims going basically sideways, right? That's all it's been doing since what it looks like June of last year. And so nothing major, you're not really making a dent in it. They would think these rates would be more, but there's still a lot of jobs out there for people. People still can still work 2 or 3 jobs, even though I know it sucks. What I thought was interesting, though, and again, I don't know, the data is almost hard to believe, but when you look at this right here, I had this come up last week, and I finally able to fit this in for you. Over the last 3 months, the U.S. economy has shed 1.87 million full-time jobs. That's the largest decline since the GFC, the Great Financial Crisis, outside those lockdowns we did in 2020. And you can see like full-time jobs going down. This is where everybody, gripes and complains, goes, man, this data sucks. And people working, multiple part-time jobs, which is mostly true, right? And why is that? Because companies are cutting out the full-time jobs so they don't have to pay benefits and just putting it, usually under 30 hours for a lot of people, so they can't get benefits, right? Now, what does all this hot data do, even the CPI we got this week? Well, all of a sudden, here is the June rate cut. That number is 54% now. It was almost 90 about a few months ago. Okay, and this takes into consideration like all the big firms, what they think is going to happen, the banks and everything. And it's never been wrong when the Fed meets. This thing is right on spot. It's never missed on what the Fed's going to do that day of the Fed meeting. It will change all the time, though, right? But what all of a sudden you go from 90% about 2 or 3 months ago, now it's at 54, and to the right there, you'll see where we're at right now. To stay the same, that went from like 10% up to 40%. Now, what does that affect? Well, it's the dollar, right? Set on that trend line right there. Be a good time for a bounce. Maybe you're starting to see some momentum coming to that. If the dollar does rally, that's going to be bad for stocks, especially those high beta rate sensitive stocks, because what do you see the 10-year doing? Spiking, right? And it's starting to get that bullish MACD cross above the 0 line. Again, if this starts moving up even more, that is bad for high beta stuff. That's your Cathie Wood stocks, your small caps, which you might have noticed. And of course, you saw that today. Look right here. TNA is the 3x leverage ETF for the IWM. But you saw Enphase, you saw regional banks. That's not good for them, right? Not good for their bond portfolios. The Cathie Wood stocks, Chinese stocks don't even matter. They just get hit anyway. TLT, right? Not good for bonds if yields are going up, right? Any of these. Palantir, go down, Coin, Affirm, Upstart. Any kind of high beta stuff is going to get pretty much slammed to the dirt unless they have some really good news. But did you see what the big boys were doing today? Before we continue, please hit that like button, guys. Helps people find this video. I really appreciate it. And if you like the content, think about subscribing. And it's very simple. I call it the 2023 plan. What did they do at the beginning of 2023? Really the end of 2022. They start taking all their money and just piling it into what? Google, Microsoft, Apple, stocks that have a lot of cash, right? Have moats in what they do, right? And then why? Because those like Microsoft and Google I've showed you, they love these high interest rate environments because they already finance their debt super low and they actually make more money off the cash on hand than their interest expense is. And so today, what was going on? You might have noticed. Google, Microsoft, and you have Google A shares and B shares there. This is the NASDAQ 100 stocks, by the way. Apple going here, CLAC, Amazon was another one they were piling into, right? So all those others are coming down. Airbnb, you see all the green right here, okay? Now, and you see the red, not majorly red, and these have no weights to them. What else did you see going on? You had over 40 other large cap stocks, not just setting new 52-week highs, continuing to set new all-time highs in 4 or 5 different industries, okay? And so that's why you saw the QQ holding up so well today, because again, these have huge weights. Those 4 stocks, just Google, Apple, Microsoft, and Amazon, right? You can come in and you can count the percentage you want to, but it's like over 30% just for those like 4 or 5 stocks if you count Meta in there, okay? And when they're up that much, you go, oh, wow, look, the Qs are holding up. Now, they end up selling off pretty much at the end of the day, but compared to everything else, they were good to go. They were putting their money somewhere, right? So they're kind of rotating money out of other stuff. They ran up, putting it over here. Another reason you knew this, because just pull up RSP, QQEW, the breadth was terrible, okay? Because RSP is the equal weight of SPY. It was down over 1%. QQEW, again, about 3 or 4 times down what the QQQ was, excuse me. All right, and then you go over to the sectors, and all you had was XLE, which is still doing good. XLK is the big tech. Everything else is red down the board. All right, and then when you get down to the bottom, you see all of that. Real estate, biotech, the small cap tech stocks right there, okay? Cybersecurity, anything high beta was absolutely blood red today, pretty much, okay? And you can see with IWM, what was key here was, when I was looking at this, trying to hold that trend line, which it actually closed below today. And it's broke down, before, but you can see just multiple times where it's been riding this trend line up starting early December right there. And then, of course, there's the shorter term trend line, which we broke down through the other day. But again, in close below, we'll see if this continues on. If it does, look for this level right here, which is going to be around like 198.99. Definitely pay attention to that one. Or we'll see if we finally get the bounce tomorrow. It's about 1.5% down on these. And then you look at Tesla, boy. Whoo, Tesla. We had talked about that trend line right there, and you can see, boom, boom, boom. If they broke that trend line right there, that next level in the 160, like 3 area is going to come into play. That trend line's been holding since last year. So, again, this is where it needs to bounce really, really bad. If not, that's when you're starting to really hear a lot of people talk about 152 as a level. Maybe in 144, there's a gap down there. Again, Tesla does not go straight down. No stock does. Okay, so we'll see if we get these, again, once it starts getting oversold, we start getting a bounce or not. But this one right here had really like crazy action going on. If you look at the weekly here, I showed you this RSI the other day. It's been a long time since it's been below that right there. And so you can see once it starts, sometimes the momentum continues on. Now, we were in a crash last time this happened. We're not in one now, but we'll see. And what's crazy is the leap puts that were being bought up for March of 2025. 110 strikes, 115 strikes, 120 strikes, and it was millions of them, right? And these were sweeps, so they were saying just fill them at the best price, really. And so, if I minimize this a little bit, you can see what I'm talking about to the right over here. These are straight put sweeps, and we're talking about, like, I don't know, what was that, $6-7 million worth of them, which is kind of crazy when you think about it. But hey, let me know at the bottom what you think, if that's a good call or not. Now, NVIDIA, obviously this is another big one. This one was red today as well. Again, like I talked about, for me, it's just looking at these levels right here. If this continues to sell down, even though I'll be surprised if we don't get a bounce on this one, somewhere in this area right here, around 836 to 842. If you continue to see weakness right now in the hourly, you can see that it is not making lower lows. We are making lower highs right now. Again, next level, if we get way down there, it's going to be like 770, 775 and stuff. But we'll see. I mean, it looks like, to me, it's time to curl up at the end of the day. And you know how NVIDIA is, these semiconductors, as soon as it starts to sell down, and I'll show you AMD in a second, you get these bounces, okay? And when you look at AMD, prime example, this one right here came down to that trend line we were talking about, the support line right there from the previous all-time high. And you can see it bounced. That's what happened. It came right down to it, got just a hair below it, and then closed above it at the end of the day. And when we really pull out on AMD, it's had a pretty nice pullback here. I know it's been like moving up like crazy off that gamma squeeze, but this one right here, I mean, 19% down is nothing to sniff at or anything. It's coming back down in that fair value gap, trying to mitigate that as well. And if you look at the Fibonacci level, from this move up, we pull this down. This is in the discount range, right? I'm gonna pull this to the right so you can see it. But below the 50, now it's going in that golden pocket into a support level. So, that's signs where you at least see a bounce. I don't mean it's gonna bounce, come back down, but it'll be interesting to see because don't forget, I'm gonna go over a minute. Tomorrow is monthly OPEX, the third Friday, right? And we do got more economic data coming out. You're going to get a lot of manufacturing and production data coming out tomorrow. We'll see. The market's been ignoring this stuff like crazy. You will have Michigan consumer sentiment. The market's not going to care about that either, to be totally honest with you. But third Friday of the month, you have usually it's, I don't know, hundreds of billions, trillions of options expiring and stuff. So a lot of shenanigans tends to take place on Friday, a lot of volatility sometimes. And so market makers, do their thing on Fridays more than anything else, or at least set us up going into it. So, and like I said, this week's been weird, right? Normally hot CPI, you would get red. We got super green day that day. Today started off green, then it tanking down to red and stuff. So we'll see what tomorrow brings and everything. And then next week, we're going to have the FOMC meeting, which I think we all know should be, it'll cause volatility, but I think we know what's going to happen. There's no way they're cutting rates. We know that. And so, but you'll have the algos kicking in, all that good stuff of what he's going to say. And, I think they may do a June rate cut. That's all they're going to be listening for. All right. And then you also have, I believe it's VIX expiration. I think that is next week. I'm going to have to check the date, but that usually kind of frees the market up. You might as well notice the VIX today spiking up and stuff. So a lot of people are hedging with VIX calls coming into April and May. So definitely look into that. So let me know if you got anything out of it, guys. Hit the like and subscribe button. Really appreciate it. Let me know your predictions for tomorrow. What do you think? And what is your price point for Tesla? If you would buy, what would that be? And also, do you think NVIDIA is going to recover and AMD is going to recover or not? Or continue to finally sell down? Because people are taking profits. There's no ifs, ands, or buts about that. And a lot of people don't like to, if they're so big up, ride a lot into OPEX just because there's so much volatility and stuff. So, especially if they're in options, because they'll just get ate up. So, anyway, hope you guys have a good one, and I will see you tomorrow.